Before we dive in, just a quick reminder, this is all for educational purposes. It is not financial advice. Please always do your own research. Okay, let's get right into it. This is our health report for PLAZM on day 162, and wow, what a day. We're looking at a huge rally, the vault smashing another record, and it all happened under some very, very telling conditions. You have to start right here, with the big number of the day. After weeks of just chopping around, the PLAZM price exploded by nearly 19%, a massive green candle that definitely got everyone's attention. But you know the price itself? That's really only half the story.
Now, here is where it gets really fascinating. This entire rally happened on a day when the protocol released exactly 0 new tokens. None. No new supply, absolutely zero sell pressure from the protocol itself. This is basically the whole thesis we've been watching playing out right in front of us. When the protocol stops selling, but the automated buying keeps going, what happens? Well, today I think we got a glimpse of the answer.
And while all that price excitement was happening on the charts, the protocol's underlying engine just kept on chugging. The vault, the treasury, climbed to 235 ETH. That's another all-time high. And just look at this trend. This is the 4th consecutive all-time high we've seen. The growth of this treasury is becoming this incredibly powerful, predictable rhythm.
In US dollar terms, that brings the vault's value to over $489,000. And here's the fun part. We are now just $11,000 away from crossing that $500,000 milestone. It's so close. Thanks to new ETH coming in and ETH's own price jump, the vault's value shot up by more than $24,000 in just the last day.
Okay, so let's take a breath. With all this green, all this excitement, what does a day like today really mean for the big picture? We have to be balanced here. So what this is proof that when you have zero emissions and that constant daily buying pressure, you create incredibly favorable conditions for a price recovery. But what it isn't is a guarantee that this rally keeps going forever or that the absolute bottom is in for good. Let's be honest, the whole crypto market had a good day, and that wider trend definitely played a part. So think of this as a very, very positive data point, but not the final word. And this chart really helps put it all in perspective. See? Even with a nearly 19% pump, the price today is still quite a bit below the highs we saw just back on day 137. So the big takeaway here is to view this as a powerful sign of recovery, not necessarily that we're blasting off into brand new territory. Okay, now let's dig into the fundamentals, because this is a big one. The protocol just officially crossed a major milestone. Over $90,000 in USDC has now been put to work for buybacks and building. That's 90 grand in real yield. Actual profits from the treasury's assets being pumped right back into strengthening the ecosystem. And just a quick snapshot of where all that supply is living. You can see that only about 37% is what you'd call liquid. A massive chunk, a combined 44%, is either staked or locked up, providing liquidity. Plus a good portion is also in bonds. You know, this whole structure is designed to reduce the amount of supply that's just floating around, which really helps that deflationary pressure. And speaking of deflation, that number just keeps climbing. The total count of PLAZM tokens that have been permanently burned, well, it just crossed 2.04 million. More than 30,000 tokens were just wiped from existence in the last 24 hours. So even on a big green day, that deflationary engine just never, ever stops. So what's coming up? Well, the forecast continues to look fantastic. After today's zero day, the entire next week has super low emissions. And it all leads up to another zero release day, just 1 week from today on day 169. The pressure is staying off. And this right here, this is the structural advantage in a nutshell. Over the next 8 days, the average daily value of tokens being released is $1.55. It's practically nothing. At the same time, the automated buy and burn pressure is over $843 every single day. That gives us a coverage ratio of over 54,000%. The buys are just completely swallowing the sells. So let's put it all together on the scorecard for day 162. And, well, you see it. It is just a sea of green. From the price rally on a zero release day to the new vault all-time high to major milestones being crossed, the protocol's health is just flashing green pretty much across the entire board. But here is the real takeaway, the thing I want you to remember. Today's green candle is awesome. It's exciting. But one day of price action, that doesn't make a trend. The real story, the real proof is in the cumulative data from 162 days. The yield that's been generated, the tokens that have been burned, the vault that has been grown. That is the trend.
19%. On a day, the protocol released 0 tokens. 235 ETH, all-time high. For the 4th report in a row, $489,000 in the vault, 11,000 away from $500,000. 90,000 in cumulative USDC deployed. 2.04 million tokens burned permanently, and 4 bonds compounding daily from yield alone. One day doesn't make a trend. 162 days of data does. $107,000 in real yield. 2 million tokens destroyed, a treasury that grows itself. And today, for one day, the market noticed. Zero emissions, 19%. That's day 162.
Thanks so much for joining this explainer, and remember, all this information is strictly for educational purposes. It is not investment advice. Please be smart, be safe, and always do your own research.